What's going on, guys, and welcome to another Full Transparency Trading episode. I am your host, Sebastian, and as you guys can see, I got into a trade here at 8:25 a.m. Actually went up to about $1,500. We've gone down to about negative $750. So we should have took profit at the 200 EMA for the 5-minute time frame, as that is where we rejected off of, but I was not in the room at the time, so now we're back in the downtrend, waiting for things to correct. We've protected ourselves to below the wicks down here, giving us the opportunity to stay in the trade for longer. But should we go ahead and break out to the downside, that'll be a negative $1,500 trade. This up here is $6,000, and then this right here is $1,500. And that's the first area that we're looking to take profit, but that's not why we are here. We are here to discuss supply and demand. First and foremost, what are supply and demand? And second, how do you identify them on your chart? For that, we're gonna go over to MES, where I've cleared my chart completely, and then we're gonna head over to the 4-hour time frame. The 4-hour time frame to me is the best time frame to actually locate supply and demand for the current weeks over the daily. The daily is a full day's worth of movement, and yes, it does give you plenty to look at as far as supply and demand, and it does match up to the 4-hour, but I find the 4-hour to be a cleaner chart to chart off of. So let's start. First off, what is supply? Supply is just a strong area of resistance, or where the sellers are holding. So the sellers are holding down up here in this situation, as you can see if I zoom in into it. We come up here and we reject off of this white line there, we push down aggressively. We come up and reject off of the white line again, push down aggressively. We push down further, come up again, try it again, push down aggressively. Go up to it again, try it again. We keep testing and testing and testing, we can't break it. We push all the way down and never come back up after that. What happens in a supply zone is you have sellers that are just packing in orders, packing in orders, packing in orders. You have the supply, right? And as soon as the supply is reached, there's going to be a violent reaction. The more times that supply is reached and not violated, the stronger the reaction. So we came up here 1, 2, 3, 4, 5, 6, 7, 8 times. On the 8th time, we rejected very, very strongly. And it's always easier to push down than it is to push back up. And that's why you can see you have big candles to the downside, and you get kind of like these little stairs that take you back up to the upside. So that brings us to the next thing. We now know that supply is a strong area of resistance where the sellers are. What is a demand zone? Well, a demand zone is the exact same thing with the opposite of that. It is a strong level of support, or where the buyers are, where the buyers won't let you push down any further, right? So let's find support. Well, as we're coming up, we saw that we had resistance right here. We finally broke that level, right? And when you see these white lines here, let's go across to where the current level of support is, or the current demand zone. The current demand zone is right here. Why? Because we can look to the left and we can see that it matches up with the bottom of this wick here, where we initially started pushing up. If we go further to the left, you see that we have some support there as well. And it used to be the resistance. So it used to be the area that we were trying to break through. Once you break through, it's a strong area of support, and it becomes a demand zone. You touch the demand zone right here, and that is one of the differences between a supply and a demand. In the supply zone, you might touch it a lot. In the demand zone, usually you wick down to it, maybe touch it 1 or 2 times, and then you take off to the upside because of how aggressive the falls are to get to the demand zones in the first place. Every now and again, you'll get great ones like this that are just like the supply zones, where you tap it a lot and then you have the reaction, but majority of the time you've been pushing down, 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 down. You hit the demand zone and you go up to the upside. As you can see right there, we created a new demand zone here, wick back down to our old demand zone, because your demand zone is actually a wider range. Your demand and supply are wider ranges than your resistance. Your resistance might just be like $1. Your demand zone could be almost 10, 15, $20, or on SPY $1 or 2. So then we hit that demand zone again, have a violent reaction to the upside. You see we came down to the demand zone here, violent reaction to the upside, started consolidating, pulled back down aggressively, and then another violent reaction to the upside. So now what we're looking for in the coming days, now that they're talking about cutting interest rates, is this to go ahead and break this supply zone here, which is why we're kind of consolidating in a higher range. Okay, let's go back to our trade. As you can see, we are positive money. Positive $250. We're looking for just $1,500, so we'll go ahead and put that to about right there and look to get out of our trade at that point. And we're not worried about breaking down and falling through, because we have set our stop loss at a point where our trade will become invalid. So since we're kind of consolidating right now, we're not necessarily pushing down or pushing up. We just set our thing to a point where it will be invalid, and we're protected that way. So that is another way to take care of yourself with your trades. Now we want to close that. We want to just come to the 200 EMA for the 5 minute here, and we will. Didn't want to do that. Didn't mean to do that. Meant to pull this one up. Didn't mean to pull that one down. Meant to pull this one up. And we'll take our 1500 plus when we push back above that, which is why I have these indications that are going off. So I'm glad you guys get the opportunity to see a trade that goes deeply negative, but still never actually hits my stop loss, because I'm protecting myself all the way down here below these wicks. This is the zone right here. I'm protecting below the wicks, and now we're bouncing up off of that zone just above it, and we're heading back towards the $1,500 area. Once we reach $1,500, I'll take profit. But that's pretty much the end of this video, guys. This video was just about supply and demand. I just wanted to do a quick explanation of what they are, how you find them. You chart them out on the 4-hour time frame. Yes, you can find them on the daily, but the 4-hour will give you a much cleaner look at the chart. I'm getting ready to head to the warehouse in a minute, so hopefully we can go ahead and hit take profit before I do that. But other than that, guys, you guys have a great day. Happy hunting. This has been another full transparency trading session. I'm your host, Sebastian, and I'm out. We're going to let this trade run for you guys for just a minute so we can see where we get, if we get to take profit. If we get to take profit, excellent. Don't like to see that rejection. Never like to see a rejection like that. But if we get to take profit, excellent. At any point in time, $1,000, $1,500, I'll take profit. But we want to see at least 1,000. And 1,000 is technically where we just rejected off of. We just didn't see it come on the screen. So whenever you're climbing up, like when you're losing money, it's going to show instantly on your trades. When you're gaining money, it's going to take a little bit longer to show on your trades. So you have to be patient with your trade and make sure that you're at that point where you can in fact lock in profit. We are starting to slowly shift towards the upside now. We're pushing back up. We are still being held down by all of the resistance. This right here will be $6,000, which would be absolutely amazing. But we're just looking for the 1,500. We're not being greedy. We're just looking to get back to the 200 EMA for the 5 minute and the 1 minute. Hadn't reached the 1 minute yet. We got to just above it, and then the 1 minute shifted down. When the 1 minute shifted down, you know that the trend is holding to the downside. But as long as the 1 minute doesn't touch my sell line there, I'm good to take this trade back up to the 1,500. Once the 1 minute touches my sell line, we are just in that downtrend, and it's going to start to flush out even more. But I'd like to see us go ahead and get our $1,500 real quick. I want to do that for y'all. I want to do $1,500 for the group that's watching right now. Do appreciate you guys checking out this video. If you have any questions or something that you need me to clarify on finding supply and resistance, supply and demand, please leave the questions down in the comment section. I will get back to those questions as soon as possible. Other than that, enjoy the trade and have a great day. I'm gonna mute, get off so I can get ready for work. Yes, I still keep my day business, even though I'm doing well as a day trader. Oh, that's one thing. Don't quit your day job just because you're starting to have success as a day trader, because day trading can be very inconsistent, and there are going to be days, weeks, months where like maybe you're just getting it wrong. Even if you're a pretty consistent trader, you have to be prepared for the inevitability that you won't always get it right. Like you see, we got it right. We got up to 1,500 and we didn't accept that trade. So now we're going all the way down to negative 750, and now we're struggling to get back to our take profit area. These things happen. These inconsistencies in trading days happen, and that's why you do need to keep your day job until you've had so much success that you could easily walk away from like 10 years worth of pay. Then that's when you're like, okay, cool, I've made 10 years worth of my pay in like 1 year. Then I would be like, okay, now I can definitely just be like, I'm out of here, guys. It's been great knowing you. Thank you so much for the opportunity. Here's my 2-week notice or my 2-day notice or whatever you're going to do. If you're just going to walk out, do you. But for the time being, keep your day job and keep pushing forward. All right, so we've been all the way up here to 1,600. Let's unlock this. We have 7 seconds. There we go. All right, so we're at 2,500. All right, so that was 2,500 right there from where we started. So not bad sell off. We got in right here at, I gotta close this. We got in right here at 24.50. We just sold out at 26.30, so a $6 play. So that's $3,000 right there. Pretty good. Yeah, that was $3,000 that we just got from that open there. Almost didn't make it because my computer died, so I had to run into the house. But we ended up with $3,500 total, and now we're pulling all the way back down. So now we'll be looking to enter a trade from like right here. Protect the 21. Great trade though, guys, that we started this morning. Go ahead and tack that on the end of our video.